Hey guys, Joel Franklin, market analyst for YouTrading, and in today's video, we're going to be taking a quick look across markets. I'm going to be giving you a very brief update as to what's happened so far this week, and we're going to be taking a quick look at the calendar, which actually I'm going to pull over to this tab so you guys can all see it, and we're going to be talking about what the main events for the rest of the week are going to be. So let's jump straight into the charts and just whip through things very quickly. We had some dollar weakness on Monday, but things have been pretty much flat with the Dixie going sideways just below 103. Since then, pretty much on Tuesday and today. Uh, hasn't really been that much of any importance happening this week. Like we had Powell speak, but he didn't speak about policy. We haven't had any major US data. Okay, yeah, we had a slight upside inflation surprise in Australia. But it's Australia. Like for the Aussie traders, it's important, but for the bigger macro picture, it doesn't even really register. We're waiting for the CPI data out of the US on Thursday. That's the main event of the week. And then this preliminary University of Michigan Consumer Center report for January out on Friday will also be of interest because not only is it one of the timeliest pieces of data that you get, but it's also got this widely followed inflation's expectations reading. So that's what we're watching out for the rest of the week. We're pretty much in wait and see mode in currency markets ahead of that data. If I just show you stocks, you can see stocks have actually been moving a little bit higher in the last couple of days. You got the S&P 500, which has managed to crawl above its 50-day moving average there in red. It's around 3,930, eyeing a test of its 200-day moving average there at 3,970. We're seeing this crawl higher, and it seems to be because traders are anticipating a downside surprise. Or even if there isn't a downside surprise, look at this inspected headline inflation number. We were at 7.1% in the US year over year in November. That's expected to fall to 6.5%. So even if you get it as expected, 6.5%, well, that's confirmation or further confirmation that US inflation is rapidly dropping because, I mean, look at this. Inflation went as high as 9.1% in July last year. So it's been falling pretty much every single month since then. This peak inflation narrative well embedded at this point. And the question is, how quickly does this inflation come back to the Fed's 2% target? And a lot of people thinking it's going to come back very quickly, which would give the Fed room potentially to back off. Maybe not on their rate hikes, because that's very much priced in. But it would allow them to start cutting interest rates much sooner, like in 2024. When you look at the 2-year yield, let me just see where the 2-year yield is at. It's at 4.25%. Now, you've got the Fed talking about taking interest rates above 5%, or most Fed members talking about taking interest rates above 5%, and then leaving it there for some time. Well, if markets believed that narrative from the Fed, then the 2-year yield should actually probably be closer to 5%, right? But it's at 4.25%. So this is a market that's not buying into the Fed's hawkish narrative. We do have some more Fed speakers coming up tomorrow and the rest of this week, but even if they're super hawkish, I think everybody's data watching at this point. And last week we had that ISM data. Last Friday, you can see the 6th of January, we did see a rally on weak ISM data out of the services sector of the US economy. So people watching for when this US recession arrives, very much expected to, and when the Fed starts cutting interest rates, predicting pretty much an easier financial condition landscape ahead. Now, that doesn't mean that the S&P 500 doesn't face some very challenging resistance. You've got this trend line, downwards trend line that's been in play pretty much all year. You've got the 200-day moving average here as well. Can we break above this area? Well, if we do get a big downside surprise, imagine if headline CPI comes in at like 6.3%. Wow, that could trigger, definitely a move back above 4,000, which is here. And then, you could be talking about some serious technical buying and a pretty swift challenge of these December highs up here. From a technical standpoint, if we did get this breakout, that would be meaningful, and that could mean an eventual rally back towards perhaps this area here. Back to all-time highs, well, I wouldn't be betting on that. with a recession still very much the base case. We need to see how bad this recession is going to be. We just had the World Bank releasing new global economic forecast this week. It was a very pessimistic report. So, against that backdrop, I wouldn't be betting on all-time highs, but certainly room for a relief rally if we do get a downside inflation surprise. Quick look at some other asset classes then. Just take a look at oil, which is, trying to pick up from its recent lows, but struggling to get back above its 21-day moving average. Of course, oil is much less sensitive to financial conditions, like stocks are, much more sensitive towards expectations around economic growth, which have been the main driver, which is why it's been, under pretty much consistent selling pressure, and all the rallies have been getting faded in the last couple of weeks. And as we continue to talk about this global recession, I don't expect oil to be getting any relief anytime soon, unless there's some massive change on the supply front. But it doesn't seem like there's going to be at this juncture. Finally, quick look at gold. It's probing a very important area of resistance here, this 1880 area, which actually you go all the way back to November 2021, and it's sort of a relevant zone. We haven't been able to break above it. We've been surging for quite some time now. The 21-day moving average has been acting as a very good area of support. Time for a bit of a retracement, perhaps, but if we do get a downside inflation surprise and you see the dollar cratering, you see yields cratering, then there is a chance that we could quickly go above 1900. And technically speaking, there's not that much by way of key areas of resistance between if you get above the current area of resistance and the all-time highs, which are in this 2070 area. It's pretty much a double top, actually, that all-time high. But yeah, just to recap, CPI on Thursday, the key event of the week. Also, keep an eye on this preliminary University of Michigan consumer sentiment data on Friday. But yeah, it's all about the CPI, really. So yeah, guys, hope you all enjoyed the video, and I will see you all in the next one.